Hi, Harry Dent here with my rant on Friday, November 19th. We're getting into very, very interesting territory, as I'm sure you know from listening to my updates and newsletters and Harry's takes and stuff. I think we are going to put in a top between literally right around now until just before Christmas. I do not think January is going to be strong, as it often is, and therefore being a warning of a strong year. So I think we're going to top by Christmas. I think that'd be the most likely time for this to happen. And the markets, of course, are getting tricky as we approach this. But more important, what we're really looking at here in 2022 is a showdown between central banks and the fundamental economy and cycles and everything I study. Because the demographics, the baby boom peaked in late 2007, right when my indicator said they would. The technology and innovation cycles would have normally peaked around late 2019, early 2020, right on a 90-year lag to the great 1929 top. So we're really like almost 2 years into just, they just keep pumping and the economy keeps crawling along, but there is something happening right now that's important. Second quarter GDP 6.7%, third quarter estimated to be 2%. The Fed estimates of current activity is between 0.2 and 0.5%. So the economy is slowing down rapidly after the most aggressive stimulus ever. And of course, I've also always warned, stimulus to work, it takes more and more, exponentially more, until it just blows up. And I think that's what we're heading. 2022 is this showdown where the cycles are at their worst of our lifetimes. The worst cycle points and historically were late 32, late 42, late 82, and now 2022. And 2022 is when the 40 and 80 year cycles and the 45 and 90 year technology innovation cycles come together late 2022. So this is the year. And again, we should have already peaked, okay? Year and a half, 2 years ago, and we haven't. So they're pushing this right up against thing, which tells me my biggest focus right now is that 2022 is likely to shape up to be the most volatile, the greatest high to low crash in the stock market ever. More than 1930 or 31 or 32, any of those crash years, or 2000, 2001, 2002, the last tech wreck, and this is just the second tech wreck and the final bubble burst. So 2022, I think is going to be a very interesting year, and I do think we peak by the end of this year and very likely by Christmas. Now, something interesting happened this morning for people who look at the news deeply. Between about 2 and 5 a.m. Eastern time, we had the longest total lunar eclipse in 580 years. Now, eclipses, I remember Robert Prechter was talking about this, I remember in the 80s. He's talking about eclipses are often turning points in the markets, the kind of energy things or something. And now that's not as accurate as it used to be now that everybody's aware that they can be turning points. But we had this total lunar eclipse this morning. And again, longest in a long time. So this means likelihood that we either accelerate the move we're in, and that could be starting to happen, or we could see a top today even. So between now and Christmas, I see the top of this entire extended bubble, greatest bubble in all of history, and in all financial assets, stocks, commodities, gold even had major bubbles in this. Real estate, of course, second real estate bubble, second tech bubble here. So this is all coming to head in this time frame. So things I'm looking for currently for the S&P 500, the lead market in the US. If it keeps going up this channel it's in, it would hit about 48.20 just before Christmas. So that's kind of the high end. And at the end of a channel like this, we often have a throw over rally, which is an extra sign that it's the final rally. So I love seeing that. And maybe we go to 4,900 or high. Okay, so that's kind of the parameters in the stock market. If it were to break about 44.20 near term, let's say early next week, that would be a sign that no, we've already put in the top and we're breaking this channel, this wider channel I've drawn now. I also, of course, focus on Bitcoin, not only because it's interested more and more people here, but even if you're not interested in Bitcoin, it's kind of the leader of this bubble, like the dot-coms. I keep comparing the dot-coms, not the broad overall internet, but the dot-com companies emerging in the late 90s, led by Amazon, by the way, that were the epitome of that bubble. They were the most bubbly. Well, the crypto sector, which is not included in the NASDAQ now, is the most bubbly. So I see crypto as more of a leading indicator. And so I'm always watching Bitcoin, its flagship security. You know, don't call it a security, it's a coin, okay? And Bitcoin is in a very interesting spot too. It hit a second peak from earlier this year, mid this year. It's 68,790. Now you could either count that as a wimpy fifth wave and a top, or more likely with the correction that's occurred since, that we have one more wave up, and I'm projecting now that I've always said 85,000 is kind of one of the most likely targets. Well, 81,000 to 87,000, I put out an update to our subscribers recently. If we can break back up above this high and out of this correction we're in currently, that's the most likely target. I've also mentioned 115,000 by the end of the year. That looks much less likely now, okay? We should be higher than that if that's the case. So 81 to 87,000, right around that 85,000 target. And the number I'm looking for there is 52,800. If this rally is going to continue and see one more wave up into December towards those targets, then I don't want to see it break 52,800. Let's call it 52,500 to be safe. So that's the worry number for Bitcoin. So if the S&P breaks below about 4,400, trouble. Very likely we've already seen a top. And if Bitcoin breaks below 52,800, raises the odds greatly we've seen a top. Otherwise, Bitcoin 81 to 87,000. S&P 500, 4820 to 4900, maybe even 5,000. So get ready to make some very, very serious decisions about your investments by Christmas, and I will keep you updated.